Welcome to Stockradar Stocks on the Move for another week. Today's date is the 9th of September 2021. Biases control our behaviour in many ways, but unfortunately this is anathema to trading success. What are they and how do we control them? That we're going to look at later on today in Trading Tactics. Hi, my name is Richard Lee and I manage the stockradar.com.au website for you. We educate investors on price analysis, risk management, systems, behavioural analysis processes, trading models and portfolios. All these are explored on my website to help you understand the market a little bit better. Okay, the markets have gone up a long way, pushed by the heavy weight of cheap money over the last 12 months. Now we've got huge dividend payers that will be having to add to that support at the moment. And I've seen the market, we saw Monday the market was down 80 points, then it closed neutral. We've seen this resilience in the market where the buyers just keep buying these short-term dips at the moment. However, markets can do irrational things. So investors that have accumulated hefty, above-average returns in many stocks, be it AP Eagers, Aristocrat, Helios, Fletcher Building, Virgin UK, Bank of Queensland, Mineral Resources, James Hardie, Boral, which we managed to get out of above $7, S32 and MQG now, Macquarie Bank, or even the banks that have achieved 30% growth or better over the last 12 months. So locking in partial profits into market strength is always good money management. Some have run a long way and this has been a great market. Don't get complacent no matter how good things look. Rotation is occurring in the market, providing opportunities to redeploy profits out of stocks that have had a run and into these stocks that haven't and are just beginning the new trend moves. Trading the market is all about risk and managing it appropriately and at times of your choosing, not the market. So learn to take control. Okay, so biases will kill your trading is my little topic today. Now firstly what we're going to do is we're going to get straight into the markets. I'll just give you a quick rundown on what we're doing today. As usual, we go through the overseas markets, which I'm going to briefly touch on today because there's not a lot of change in the commodities. Look at the ASX 200, take a look at the Stockradar portfolio, some ASX stocks and go through trading tactics for you. So first off, we're going to start with the markets and we're going to kick into the Dow Jones. Again, up is what it's doing. There's not much to worry about that one there. I show it week after week, up and up it goes. It's come off a little bit this week, but there's no real dent in the trend. So Dow Jones is still looking fine. Nasdaq's looking fine. It's making new highs, so I'm not worried about that at all. And going through Brent, copper and gold, they're all going through corrections at the moment. You've seen the charts for the last few weeks. I won't go through them today because we've got a lot of other stuff to get through, but as we know, copper and Brent are both having a bit of a correction. Gold is going sideways to nowhere. So for the moment, we're leaving that sector behind. Okay, so XJO, what's that doing at the moment? Okay, it's still going up, looking very strong. Again, we've seen this resilience as I've talked about this week. It's still up near its highs, even though we've had a little bit of worry, a little bit of doubt. It keeps bouncing back. The uptrend's intact. The momentum is just saying this is a steady uptrend at the moment and we've got new highs. So nothing to worry about at the moment. When it does, the market will let us know. But for the moment, the ASX 200 is looking fine. The portfolio was up another 7 this week. We had some good jumps in this week. As I mentioned to you before, there's rotation going on in the markets. So we're taking some money out of some and we're putting some money into others. So we've had some new stock picks this week. The portfolios are back full, 5 out of 5 and 10 out of 10 for those portfolios. And even the conservative portfolio has picked up 2 stocks this week to be 8 out of 20 with 2 big new entries into that sector, into that portfolio. The sectors we're looking at the moment still the same. Property, banks and industrial materials remain at the high. The building a portfolio, which I'll have a brief look at later on, including dividends now, the take-up is, the profit's now 14.4, up since March, which is a good return, and we'll have a look at how that portfolio is looking as well later on. Okay, now stocks, JB Hi-Fi, we're going to have a quick look at this one. We can just see this new pressure that's been brought to bear on this, down the bottom here. We've seen a big bad week here. It's not responding to good news, which is what I don't like about this. It's been a year of sideways trading action. It's produced some good results, but the stock price is not going up. And we can see down here some big red bars the last couple of weeks selling. So S1 is certainly under pressure at the moment. So I'll just be holding fire. I'll be holding fire on JB Hi-Fi. And we can see here the momentum index is starting to sag below zero, especially from that fall last week. So just be wary of JB Hi-Fi. There may be an opportunity down here at S1, but we need to wait to see what support appears before we do anything. So pressure on S1 there. Okay, now Washington Soul Patterson. I'm just looking at sort of new highs at the moment. Now this made a new high recently, and as we can see here now, we had a bit of a tough start to this one. but it's now jumping through hoops and going monstrously high. So we've got the new high here. Time is not always the issue, but price is. So time, sometimes we need to wait. If you want to push things along, you can always push your stops up. I'll only push them up to a certain limit and I'll let the market go, because sometimes we just see this happen, and we're seeing a great jump here. It's now up 23% since entry, which is great, and that was back in March. So it's actually one of the portfolio stocks, one of the building the portfolio, so it's adding to it. So it's looking good. We can see some great volume here, some great momentum. It's above the average. Trend intensity rating is 10. So although a little bit slow to get off it, the new high has taken its has brought its pressure to bear, and we're now seeing a good rally. And this is also, you know, this significant high here that we've now broken through. This is a very, very good sign. So Washington Soul Patterson is a good looker at the moment. Okay, now the other one, which we did look at last week, I just wanted to mention a bit this week, Suncorp, which has been a really quite an amazing performer from being a really bit of, no one really liked this stock too much, but it has performed incredibly well. And the interesting part here is, although we've slowly trended up here, often stocks will develop their trend and then they'll start to move exponential. When they start to do that, that's when the fun really starts. So here we can see a nice little trend here, which is getting away from, so I can draw a new slightly shorter term little rule, line of best fit line. They're not necessarily trend lines, a line of best fit lines, and what the rate the market's going up at, and it looks very, very good. And this is exciting, this, because we've also got some great volume down here and also some good momentum. So you know, it lowers the risk when we see those sorts of things. And I guess the next stop is really for RT to be challenged, which is up above $15. So whether we get there, we don't know, but it is starting to turn exponential, which I find fascinating. And this is what stocks do. This is the momentum trait that a lot of stocks do. So it's gathering momentum, as we can see down here, and the volume is very good. So Suncorp's an interesting one. There may be a bit more left in that one as well. Now, one that's jumped recently, a bit out of step with the other commodities really, has been South 32. Now, we had a very nice little trend reversal back here, back in November, December last year. It was a bit of a funny one, but we got it above the average. We had a high low here from the low here. We had a trend reversal pattern, which didn't get trend intensity confirmation straight away. It wasn't until we got up through here, we got trend intensity confirmation. But it's now, again, gently moved higher. It's had a little corrective pattern here, a bit of a consolidation. And now it's broken up again and trending up again. It's now jumping up to around 336 as of last night. So again, we can see here the volume's on board, momentum started to twig up, it's above the average. So this is a really good sign. It's right in that sweet spot, South 32. And again, it's strange that the other commodity stocks seem to be going down, like the BHPs and the Rios and the Fortescues. And this one seems to be gathering some steam. So that's a good sign for South 32. So keep an eye on that one. That trend is continuing from November last year. Okay, now there's been a couple of new entries, and Technology One is one stock that's been an entry, and it's been quite an interesting pattern, this one. So if we have a quick look at the Technology One, we can see this big top here. We've got 1, 2, 3, 4, 5 tops here, which was resisting. Now, could be looking at Amcor a few weeks ago. There are a lot of these stocks that make these tops and then just sit there, and when they break through, that's a very significant sign, because that's breaking through a big selling area. So Technology One, it's no surprise it's jumping through hoops again. It really has been a very good climb here. We've seen the high lows appear here, pushing hard at this resistance level. So we're building up this weight of evidence now, and we get this high low again. We get a breakthrough here above the average. Volume just starts to come on board. It's not huge as yet. It's probably obviously hard to get stock in Technology One, because it doesn't take much buying to push it higher, and momentum is obviously very good because of that push there. So this is a recent entry. It's new highs for Technology One. We've got a power thrust happening here. Who knows where it will take us, but as long as you're protected with your stop loss, then you are safe. Okay, so that's Technology One. That's just a recent entry. Trend intensity rating is 10. Okay, now one that we have got out of, just to tell you about a bit about how our stops work. CSR was trending high from the bottom of the range down here. We can see back here, we had this rotation going to this high here up around 580, down to the low around 270, 280. Then we get this trend reversal back here off this low point here. It tested it twice again off the low point here, so I'll just blow this up. And now we can see what's happened. We've got a trend reversal here. The market's come up to the highs here. It's had a lot of trouble, as we can see all this resisting. It tried to break through, but the sellers just keep pounding it back down again. So it's having hard work there at these highs. So then all I'm doing is raising my stop at the moment. So I lift the stop up, it has another go, and then it comes down and breaks below the stop loss, stop profit I should say, and that just gives us a signal to get out of it. What it's really saying is the weight of evidence says when we see this resistance up here, it breaks the moving average, it breaks the stop level. We have also now got a lower high here, which is a worry. So the weight of evidence, which is always what I look at, the probability says risk has gone back onto this stock, turn neutral and protect your profit no matter what the outcome, and be happy. And that was roughly a 20% profit there that we had to protect. Again, we never get bottoms, we never get tops. We jump on when markets are moving up and jump off when they're moving back down, and that's how we work. So this has been CSR, that's how it worked. We're out of that one and we've moved on. That's just a little bit about how the selling does work and what we look for. So that's the breakdown there on CSR. Okay, now I also cover some smaller stocks in my newsletter, which is for subscribers and members. Just a little bit of interest, stocks that are possibly outside the top 200 that I look at, and are possibly looking to move back in there. Now, LIC is one that I've covered quite a bit over the last year or so, because we had a break up here last September, so this is about 12 months ago, around about $10. We had a good move, we had some good volume, we had see the volume there, you can see the moving average is positive, it moves above the average, then it breaks the high. So all those things are triggered, price action, volume, moving average and MACD to give it a rating of 10. We then move into here, and then it now kicks in to be a money management issue, because we've got our entry now, we've got to manage the position to make sure we don't lose any money, or don't lose too much, but we make sure we maximise the opportunity that the trend is going to give us. And in this instance, we've got a fantastic trend, and again, we see this has moved up. We've got this sort of fairly good line of best fit that runs along the average here, and then all of a sudden we go exponential, a bit like I was talking about Suncorp before, and this is when the excitement starts to happen, and it's just gone literally from $15 to above $20 in a very short period of time, in about 6 weeks or something like that. So it's, again, I'm not in love with this stock. I'm not going to hold it forever, but I'm going to take profit when I'm told to. I don't know where that's going to be, but we'll just wait and see how this performs. But for the moment, it's going up. It's got good volume. It's got good momentum. It's above the average. It's going exponential. The trend intensity rating is 10. So the key, higher highs and higher lows to find an uptrend in price. It's very, very simple. And if you follow that format, it will be true to you, because it works very well. Trends occur in the market all the time. Sometimes they fail, so we have to get out of them, but mostly often they don't. So this has been a beautiful one. It's been 100% in 12 months, and that's what we like to see with our stocks. Okay, now another one I want to cover. A few people have asked me a bit about this one. Apparently the fundamentals are all very good for this one, but it's been going down from $11.50. It's now down around just above $9. So with APA Group, if we have a look at this now, it's come off that high there. The trend intensity rating is -9 because it's going down, it's below the average, volume is high, and momentum is negative below 0. So what does that tell us? It tells us the market's in a downtrend. However, if we look at this bigger picture, I'm just going to go back here a little bit further. We can see some clear volume patterns here that have occurred since March this year, some key lows here. We've also got below it here, if we look back here, we can also see this big base of support around S2, which has been a huge base of support for it. So we're just really above that at the moment. So what we're looking for now is, so this is really key. This has been where it stopped the last few times. It's tried to bounce off here, so we're getting this trend reversal trading range here. This is key here because they're the highs here. We are getting support, which is good. We could see a bit of volume that occurred here, which did push the market up, and it was quite an exciting possibility, but not to be, and it came back down again. So it's an interesting one. It's chopping and changing. It's probably looking to form a base around here if it can. It's encouraging, but not enough. Is this the start of the bottom? Is this part of the bottoming process? Probably is, but we need to wait and see, and we need to wait for all the evidence to be weighed up and collated, and to actually trigger a trend intensity rating of 4 or greater to signal an entry for me. So the trend intensity rating is still -9, which is not good, but it's certainly worth watching because I think it's getting down into an area where we look at, I was talking about before about rotation in the market, getting out of some heavy price stocks and into some lower price stocks, which is sort of a, it's just good money management to do that sort of thing. Okay, so that's APA Group, interesting stock. Okay, now I want to look at a couple of other stocks. Firstly, I want to look at Qantas, which is, we all know that hopefully we're going to be opening up a little bit more next year and there'll be a bit more free float of travel and things like that. So the tourism stocks, Flight Centre, Webjet, Qantas have all had their ups and downs, hopes dashed, it's all gone on. So I've just put the Qantas chart up here for you today just to give you a very simple outlook on what it looks like at the moment. It really is, you've got your highs up here at R2 up around 750, you've got your lows down here at around 250, and at the moment we are in the middle of this trading range. Now the good thing about this is we've rallied up here and we're still holding above this low here. So I'm impressed at this high level of support, so that's a good sign. But we have this area here, about 550, 555, which is resisting prices. So that's really the marker that I set myself to say, okay, if this is broken, that's significant. That means the buyers might be starting to take control, okay? So then I will look at, is it above the average? Well, it is above the average, which is flat at the moment. Not going down anymore, which is good. It's flat, and we can start to turn up pretty easily. Volume in this last little rally off the lows has been quite good, and momentum started to turn positive. So all of a sudden, I'm getting the picture. If this starts to break, I'm going to get a qualifying trend intensity rating for Qantas with possibly a move up towards here. So it ain't over yet. We've had some false starts before, so don't anticipate anything. But it's encouraging, and we're all hopeful of a little bit of freedom next year. So just keep it simple and clear. What are your triggers? What are the main points? What are the key points? And here it's just really set out fairly easily for you, fairly simply. If Qantas goes above 550, I'll be looking for a rally up towards that $7 level. So that's what I'm looking for. And Qantas provides an interesting opportunity, I think, at the moment. Okay, now just to finish off on a bright note, we've got two great stocks that have just been hammering along for a long time, for 12 months now, I think. Aristocrat, I like to show these because stocks that go up often keep going up. And even if you take some profit along the way, which we have done with Aristocrat, we're still in there and we're still holding some and we're still exposed to this trend. So this is up, it's well away from its average. Volume is quite good here. If I just push this up a little bit, just to squeeze it up a little bit, you can see it's quite solid through here. And momentum is very positive, it's very high on the scale and it's turning up again. So Aristocrat looks fine. We can never tell what's going to happen, but the trend intensity rating is 10, so it's certainly a hold and raise your stop situation. And DMP has just been a sparkler since it broke above $100. It's just gone to get gangbusters. This is a technology stock. It's not really a pizza stock because it finds ways of selling you pizzas faster, quicker, better, cheaper, and it does that through data analysis and working out its own system. So it's doing very well. I just raised a profit on this one. It's a new high. We talked about expensive stocks before. This was expensive maybe when it was $100. It's not expensive now. The price is $160. That's all in the eye of the beholder. And then if we go down to the bottom of this chart, we can see the volume has been enormous. Sorry about that, it's a bit touchy. Volume has been enormous and the momentum is very, very bullish as it expands. So I don't know where this is going to go, Dominoes, but it's certainly going up at the moment and that's the way we like it. And we're getting a great big power thrust at the moment. And each week we're able to knock out, raise that stop loss all the time, that stop profit all the time, which is great. Okay, so they're the stocks I've got for you today. An interesting market at the moment. As I said to you before, it'll be interesting to see what happens today where this market can rally back up towards the end of the day because we've seen some good resilience in the market, plenty of money out there waiting for it. So just it'll be interesting to see how it does perform. Okay, so last week in Trading Tactics, I went through trends and the opportunities, new highs and trends and the opportunities they provide. Run them or cap them is how I do it. So if it's a good profit, good trend, I run it. If it doesn't work out, I just cut it out and that's the way it goes. This week, I want to talk about biases. We all have them, whether we know it or not. This is when you decide to plan your control mechanisms or wing it. Winging is not such a good thing, but you need to control. So I'm going to talk a little bit about that now as we go into Trading Tactics. Okay, so firstly, have you ever heard yourself talk when you talk about the stock market to your broker or colleague? We all push our own barrows without knowing. We all have biases that we want to convince people of, especially if we have a position in that stock. Okay, to be able to neutralise those things is quite hard. So have a listen and you'll hear your own bias as you lobby others to confirm your bias and give you the comfort that you crave, which we all crave. So we're all looking to get comfort, we're all looking to peddle our biases, we're all looking to be with the crowd because it's comfortable, but what we've got to do is take control and do our own thing and do what's right according to our trade plan. Okay, so we all do it, we all have our biases, but it's the wrong way, so go back. When trading markets, being able to recognise your biases and neutralise them is key to clarity and consistently better decision making. Okay. Some examples. I'm going to go through 2 examples for you. There's a lot of biases we have, but I just want to give you 2 fairly simple biases for you. Confirmation biases. We tend to listen only to information that supports our position and ignore information that doesn't. Have you ever read the newspaper? You read the newspaper, an article on a stock you hold, and it tells you good news, you read every bit of it, so this is fantastic. If it starts to tell you a bit of bad news, you just might think, I think I'll just move on. And that's what happens sometimes. So that's confirmation bias, just looking for information that supports your position, rather than being able to look at it really clearly. We shouldn't do this, but we do this. The next one is anchor bias. Anchoring yourself to recent events such as a loss. It makes you hesitant to have another go. So that's again, the past is the past, the present is now, and that's what we operate in now. So we shouldn't do this. If we get a signal, it is go. And often this occurs with me when I get trend reversals at the bottom. I might have to have 1, 2, or maybe even 3 tries before I get it right, because bottoms can be fraught with danger and they can have false starts. So it's difficult sometimes, but you really need to get rid of that anchor bias of taken a loss last time and just look at things clearly. And it's not that easy, but it's what we really need to try and do. It's like when we're trading the market, it's like being emotionally in control, not being too crazy reckless when the market's going for you, and not being fearful and paralysed when the market's not going for you. So it's looking at the market clearly, whether the market's in a bull market or bear market, and seeing what it is. So that clarity is very important. And here's another one, blind spot bias. Blind spot bias, that tells us people fail to recognise their own biases. Hello, maybe so. People notice cognitive biases much more in others than themselves. If you listen to someone else speak, you'll notice it, but maybe you're convincing yourself that you're not doing that. Anyway, biases are very interesting to talk about. We need to be able to make good decisions based on the facts of our strategy. We must be able to clearly recognise the opportunity without it being tainted by our own biases or how we feel. What's real and what's not, that's the really hard part to do. Okay? So, in the Stockradar blog, there's a little article called Review Your Biases. 20 cognitive biases that screw up your returns. There are 20 of them that I look at for you. There's a list of 20 biases you may be able to relate to. So if you go to the Stockradar blog, type in biases and hit return, you'll see it come up. I think it's the second one that comes up. And you'll be able to read about 20 of those biases and you're going to go, yes, I know that, that's me. And how can I get rid of those? And you really need to be able to do that. It's a big part of trading. It's all this, psychological stuff, biases, control, all these sort of things that we need to adjust our emotions to be able to trade, not only profitably, but consistently profitably. Okay, now I promised you one more thing. I'm going to look at the portfolio. Building a portfolio, cut your dogs and run your stars. Now, we've looked at this portfolio a couple of times, and if I just go to this now. Okay, now this is my little share trade tracker that I run for my portfolio members, so they can see the portfolio and I can see the portfolio and see what it is. So for the one that we can see, I hope you can see this okay. You can see JB Hi-Fi, Minerals and Adelaide Brighton are all up the top there. They are actually now, if I just go across to the left here, you can see they're actually now sold and they are out. And we took a small loss of 16% on JB Hi-Fi, a profit of 20% on Mineral Resources, and a loss of 6.6 on Adelaide Brighton. The right thing to do, get rid of those stocks that weren't performing, and we hold the ones that are. And again, here we look at, this is the profile that I always want to see. I always want to see my longer dated ones, which started at March for Sol Patterson, at better returns. And these last two, which are Car Sales and WiseTech, they're more recent ones, so they're smaller returns at the moment. But the profile is there because as stocks if they start to make a loss, I will cut them out. But the ones that start trending will start to generate returns, like things like Sol Patterson is, like Computershare is, and like IGO is. Now they're all up, well up this week. Now the whole portfolio, including dividends, is up 14.4% since March. It's been a pretty good few months, but that's really how it works. So that's the portfolio as it looks at the moment, and it is performing very well indeed. Okay, so biases will kill your trading. That's been my topic for the day. They're an anathema to trading success. They can blind you to the reality of what is in front of you. Having the ability to be clear thinking and objective requires an understanding of how you respond to the market, okay? Controlling decisions via a systematic process is one way of tackling an issue. That's how I tackle the issue. Getting rid of emotions, getting rid of biases. I have a system that tells me what I'm going to do and when I'm going to do it and how I'm going to do it. So I don't have to make any decisions. My system does that for me. So let the process take control because it generally knows better, and it probably does too. You can take a free trial of Stockradar and see how this process works. Just follow it through each week from my trading centre, and you'll see how we develop. Okay, good luck for your trading week this week. Thanks for listening. I hope you all learned something today, and I'll see you all again next week. Thank you.